will it be the same feeling that market participants would evoke at the at the end of the week, if you will? I know you don't talk so short term, but I'm just trying to understand. There's a union budget, there's a Fed meet, and there's been considerable volatility in the markets in the last few days.
Yeah, I think it's gone a little beyond what the general budget volatility would have been, because there was this other big event of that report on the Adani Group. I think that was more of a trigger for the volatility than just the budget alone. So, and as you said, that I don't look at things from a 1 week perspective. From a longer term perspective, I remain positive on equities globally, and on top of that, India also looks like continuing its outperforming streak, because which came out of after a long period of underperformance relative to its own history as well as relative to global markets. So when that tide turned, and 2021 was the first year when India outperformed, that out of a list of 42 indices, it was number 13, which proved to be lucky. So I was quite clear that that would continue. 2022, it was number 10. It's still down in dollar terms, because only about 5 or 6 markets were in the green, but way better than the globe. I mean, India was down, I think, 4.7% on the average. Markets were down 18.5 or so. S&P was down about a similar amount, and Nasdaq, of course, did far worse than that. So that outperformance streak looks set to continue. And as far as asset markets, global assets markets generally are concerned, 2022 was a disastrous year, and I don't say this lightly. I'm saying that even if you take a century or more's perspective, it was a particularly bad year. So if you look at the bond markets, US bond markets records, or at least reconstructed records, go back about 230 years, and this was the worst year ever. If you look at bonds and stocks together being down, it happened once in 1931 during the Great Depression, once in 1941 during the Second World War, and then 1969 and 2022. So it was such an outlier year. So when things are, and not just the US, I mean, if we did the cross table of assets and geographies, and everything was down around the globe, all regional indices, all kinds of debt, everything was down. Only 2 positives were, even within commodities, the precious metals had a boom and bust, industrial metals also had a boom and bust. So net for the year, you were not up. Only things which were up were energy and a few agri commodities, and that was it. So it was, once that kind of year happens, you don't expect it to repeat, because that kind of thing doesn't repeat often. Of course, improbable doesn't mean impossible, but the likelihood is that 2023 will be an up year, and that India will outperform. So I remain positive on equities. Of course, you should have an asset allocation. That I always say, that even if you are young, don't put 100% in equity. But having said that, it's a fine year. As far as this recent volatility is concerned, as with all such things, in the short term, the reaction is always overdone. So if you look at the Russia-Ukraine war, for example, in one day, India's markets fell 5%. And at that day itself, I had said that this will not last. 6 months later, you will forget there is a war on, except for things which are directly impacted. It's certain, if oil is impacted or certain chemicals are impacted, that's a different thing. But in general, it will no longer be an overhang on any global markets, India included, except the markets which are directly impacted. So that even in this case, not just the Adani Group, but also banks which have no exposure also to that group fell. So everything fell. So that kind of reaction in the short term is always overdone, and I don't see any great risk, at least in the short term, on this front.